outside the virus. That's not the name of the show. That's the wrong show. Woo! Doing too much today. Just one of those days out there, yeah. Hey, welcome to The Closing Beat. We cover different stuff on this show, and I'm happy to be here today. Thank you for joining me. Hey, Stock Market Show. We cover the stock market. You know the drill. We don't need to go through all of it here today. We also got our class tonight. That's really what I was focused on earlier. We're doing our stock market update, portfolio update, and economy update tonight. We're going to throw something different in there with a lot of great geeky stats and stuff. I had fun putting that class together. I can't wait. It's you're going to like it. If you're one of our customers, basically all you do is go right on into the dojo. And what happens, here's a picture of it. What happens is you go in there, it's right here, it's this class right in the middle there. And at 8 o'clock tonight, it'll just go and turn live and it'll pop up and everything. And you can come join us for the class if you happen to be with us here at Jazz Wealth. Also our Jazz Artists, there's many other classes in it. Look at all that stuff. All kinds of great classes. We like to teach our customers around here. I don't like to brag about it too much, but I do like to point it out. I think that's worthwhile, right? That's a fair trade-off. So lots of different classes for you to help you learn, and more detailed classes than what you get, of course, publicly, because we get in trouble for that. Our Jazz Artist of the Week is Charlie Parker, and he's got a song called Donna Lee. And if you could happen to look it up with Miles Davis and Max Roach playing on the song, I think you'll greatly enjoy that. Let's take a look over at the stock market today. You've got a gain on the Dow of 211 points. That's off the highs of the day, but not too far. S&P up 32, and Nasdaq at 19 on the day, a little bit the better performer of the day, and it has been that way for some time if you like looking at the major indices there. Look, it was a cyclically driven day today. That's the fancy way of saying stuff that people don't need to buy but go and buy anyways did well today. Financials, your energy, consumer discretionary products, things like that did well today, and it had the S&P up higher on the day. We're in the chop zone here still, and tonight we're going to cover the probabilities of the stock market going to various points on the way up and the probabilities of it going to various points on the way down. That is something you can quantify, so we'll be going over that tonight, but basically just chopping around at the moment. You got a good day, you got a bad day. We call it a Christmas tree type market because every other day is green, red, green, red, green, red, and if you're not from the States here, Christmas colors tend to be green and red. So that's what we have there. Oh, and also your super duper cap stocks were in the mix as well. You had Microsoft higher on the day. Amazon was higher on the day. Just little gains there that helped boost the markets over in that category there. Now, you got bad news out there, man, but bad news that was perceived as good. I don't get it. I don't know how we're all just ignoring what's going on out there, but we'll save that for the Outside the Virus show earlier today. Anyways, let's take a look at this. You got initial jobless claims came out today. Yikes. There you have them there. Just so you know, this is all messed up. And that's not an error, that's the actual data. So today we put in 3.16 million more people to the number of jobless. Look what happens here. I'm just going to zoom way out. Let's just go as far out as we can. This is the fastest we've ever added this many people to unemployment ever, or to the people that don't have jobs there. 33 million, just over 33 million at this point. And you can see we're going all the way back to 1967 in there. So before many of you were probably born, you could see that's the data. Even through the tough times, I'll go over here and just show in recessions. I usually do that anyways. There's every single recession. That's how bad it got throughout the recessions there. But 647,000 was one of the changes in there. You had 627,000, no, $3.16 million. And the stock market just, they don't care. It doesn't matter, right? So not good for them, but the silver lining, if you're a bull, I don't mean to bring you down. The silver lining here was that we're on a downward trajectory. That was the excitement. Well, it's better than what we had over here with the nearly 7 million added week over week. So because of that, markets kind of look past it and look towards some of the earnings that came out today. Lots of great earnings if you're looking at companies individually there. And also, this jobless claims number is what's known as a leading indicator. And if you're brand new to the markets, that's Wall Street term for saying it's an indicator that we look to with positive results will lead the market higher. It's probably the easiest way to say it. Or if that number is bad, you expect it to lead the market lower. There are things known as lagging indicators as well, which look back further. They may look back over a quarter, and they may compare that previous quarter to the year before that. Well, by then, the economy's like 3 months ahead, and we're really looking a year now and 3 months back in time. So it gets a little bit messy, and people say, well, that's a lagging indicator. It really can't be trusted for immediate sort of short-term market decisions. And this jobless number is known as a leading indicator. And so because that was trending lower, although still ridiculously high, well, I assume that's why people looked at the market today and said, I'll buy. You know what? We'll buy a little bit of that. Anyways, if we take a look here, you've got, well, there's the S&P. You've got the Nasdaq is the strongest sector in the group today. The Nasdaq and the Nasdaq 100 now positive on a year. The Nasdaq 100's already been positive. I think I got a chart here for you somewhere. The Nasdaq 100 already positive, but there you go. Nasdaq Composite hit highs today as well. That one closed just barely in positive territory year to date. I'm talking about for the year so far. So what I did is I put on the chart here your 4 major indices there. You've got the Nasdaq 100, unfortunately, that's what I put there, up 4% on the year. And then you've got the other major indices down double digits. The S&P, not so bad. The Dow, a little bit worse, and the Russell, obviously the worst out of all of them there. And then what I did is below I wanted to show you which stocks were contributing the most to the Nasdaq's gain. It's basically 5 stocks, right, in the Nasdaq 100. Amazon, Microsoft, Tesla, Netflix, and Nvidia. Off to the right, you can see their contribution to the 4.42% return overall. See what I do? I gave you some beginner stuff. I gave you some geeky stuff, right? Yeah, I put it together. I try. Oh. No pat on the back just yet. Let's see what else we can do. So Nasdaq 100, tech, big cap tech, all that stuff headed higher and has been headed higher for some time now. So you get the idea there. I'll give you the Russell as one of the other stronger indices today, just for today, up 2.29%. Russell 2000 gets to be in the mix. The Dow was your weakest overall. We'll go over there real quick. You got the Dow up 1.5% on the day. It's going to be your biotech and your healthcare stocks. Pfizer down 3% on the day. These have been leading the way on the way up. We've been pointing out kind of day after day, healthcare doing well. Some of these are included in that mix, and they all took kind of a break today. It was a broad sell-off overall. Pfizer and Merck, which lost about 2%, were your 2 worst performers in the Dow today, and that helped kind of pull things down. Interestingly, Boeing had that reversal. Yesterday we said, hey, Boeing looks like it's sliding off a cliff. I gave you the example and everything, and we said you need a reversal pretty much right away if you're going to get people to stop selling. Today went a long way towards that, up 5.5% on the day. So that kind of shows you where people were not necessarily broad-based buying today. It wasn't what you would normally call like a risk on. You know, you see it on TV. They'll say a risk on day for Wall Street. They didn't say that today because you didn't have oil. You just didn't have everything in there. You didn't have consumer staples, right? You didn't have utilities and things. So that's the reason why. Just kind of a selective day there. I've rattled enough. Now let's talk about fin tips. What would it be yesterday? Fin tips, we talked about how to get free stuff in May. Of course, you want to check that out on our YouTube channel. And on Outside the Virus today, we did something really interesting, and I'll just briefly mention it. You can watch it if you want. But we said, okay, starting Monday of next week and looking out 30 days, let's take the average performance of everything. Let's just see what the best performing sectors are and see if we could drill down into something by looking at a sort of seasonal performance in the market. Seasonal because we just chose a random period of time starting on Monday going out 30 days. So if you're curious, shared all the data, not just a chart. We shared all the data with you there on Outside the Virus. Hope you'll check that out if that's something you're interested in. Let's go over to the sector breakdown. There it is. You had only 2 sectors lower on the day. That's going to be healthcare, which you're getting my drift right now with showing Pfizer and Merck, just the sell-off across the board there. I'll cover that in a second. Consumer staples down on the day as well. This was your worst performing sector of the day. It's only down 0.25%, not too big of a deal there. Basic materials was the better performer of the day there. It was a broad rally. However, look at a few names here. You had Lind, 3.25% on the day. Newmont Mining was up 3.4% on the day. I point those 2 out because together they make up 1/4 of the materials. Basic materials. There you go. So that's part of the reason for that. The XLB, if you happen to look at it that way, adding 2% today. It's now up about 12% over the last 30 days. Interestingly, today, of the 2.05% that the materials gained, inside of that sector, there are industries, right? So it goes major indices, sectors of the indices, then it goes down to industry groups. So you can drill down into little pockets of stocks if you want. And so in the basic materials sector, the industry that had the best day for that sector was chemicals. You can look at a few different names in here. They weren't like rock star days, but they were good days. Air products and chemicals added 1.5% on the day. That was one of them. Ecolab, 0.5%, right? Gave back a little bit towards the close. Dow DuPont 1.63% on the day. So the half of all the performance in that sector today came from that industry category. So kind of interesting. I don't know if that's interesting to you guys, but I find it interesting. Financials up 2.35% on the day today. Nice reversal. Good for me. JP Morgan attempted to make a comeback and only added 1% on the day. If you're not familiar, in our the show that we're doing for the Stock Madness, we're kind of March Madness, but for stocks, we're down to the final week. It's Microsoft versus JP Morgan. I've got JP Morgan. Cody's got Microsoft. I'm losing at the moment. So I needed that JP Morgan to come back. But you had some other big banks in the mix as well. You had Citigroup up on the day. Morgan Stanley, 4% on the day. And Bank of America, another standout, 2% on the day. They need a rally, right? These are some of your leaders here. The financials have been lagging, and I've got a chart for you here I could share probably. There it comes. Yep. So here's financials year to date. The purple line is the financials, or the XLF, and the orange line is your S&P 500. You can see the S&P, as I showed earlier, down about 10% year to date. The financials down 28% year to date. They are lagging behind. We covered yesterday on what does that look like? What happens when the financials start to spread away from the S&P 500 and become less correlated to the overall move? It's not a good sign. It's not a good sign, right? Overall. But that's basically that. Interesting study here. If you look at the S&P, I'll use the ETF so you guys can play along. You know that the S&P is made up a lot of financials, healthcare, and tech. And we always say you need financials and you need tech to get things going in the market. We don't have financials. We haven't had them in a while here. If financials would have performed in line with the stock market, just in line, do you know we'd be at new highs right now? That's how much weighting the financials have had on, I mean, I'm assuming everything else would go along with it. But if financials would just kick in during this rally, we would have recovered the entire decline at this point. Weird, right? You think, oh, it's, you know, virus-related stocks, they haven't recovered. No. If the financials would just start rallying and would recover their gap between the performance of the S&P, we'd be back to highs again, and we'd all be going, so 33 million unemployed and we're at new highs? Something's off, all right? Kind of weird, but that's that one. Let's move on. You got communication services back above the 200-day moving average, added 2% on the day today. Some stocks that stick out, T-Mobile with their earnings, great day for them, 10% gain on the day, basically flat, a flat 10%. Charter Communications in your entertainment media space, this was the communication services. So remember, index, sector would be communication services. Entertainment and media is where all the excitement was today. Twitter's also in that space. They got Twitter up 4% on the day. Looking at the price of oil, we were positive to start the day there. We talked about it on Outside the Virus. We were right smack back into the 50-day moving average, but it faded away. Not too bad, but a loss on the day of 1.3%. By far, this is the best move now ever for history, for oil. Best move ever. You cannot find another moment in time where it has had a rally in this short of time as good as that. Healthcare basically flat on the day. By the end of the day, you had your biotech stocks, right? Not biotech, your healthcare stocks, drug companies down Eli Lilly down 2.3% on the day. We covered Pfizer. I'll cover a couple others. AbbVie down 1.4% on the day, and Amgen down 1.4% as well. Question: people say, well, what's really going on here? You got the stock market moving higher and essentially recovering from an economy that's way behind, right? We're not doing well. What's going on? Well, we covered some of it in last week's class, but I really want to point out a 5-year chart real quick. If we go over to the 5-year chart, we're basically right where we started for a lot of the sectors. What I did is I looked at the last 5 years of every single sector here, and then we looked at, obviously, the decline, but where have we come since then? If you look back over the last 2 years, just a little over 2 years, most of the sectors are right where they were. They haven't really done a whole lot in the last 2 years. Granted, that's a large range that we're looking at, but broadly speaking, there hasn't been much gain relative to, look at tech. Tech up here with a massive gain. You could argue, obviously, if you bought it 2 years ago, you've got a profit. You can't make the same argument for 9 of the 11 sectors out there. If you just randomly picked a sector, 9 out of 11 of them are, you could say it, you know, you probably have a break even, maybe a slight profit at this point. So that's kind of interesting from that standpoint, but it also shows that the markets are not necessarily recovering. They're just bouncing around in a range, or at least the sectors of the markets overall. So again, I don't know if that's interesting to you, just something I thought I'd share. All right, you got 8 new highs on the day. A lot of the same names. Newmont Mining hit new 52-week highs. That's the third time this week. Rollins up 1% on the day. ServiceNow was another one, I believe. Yep, very extended there, 4.5% gain on the day. The standouts today in the new high list going to be PayPal, 14% gain. Not bad, guys. Earnings. And then Fortinet, 21%. They they get the trophy for the biggest gain on the day there. No new lows today. If you're looking at some of the ones that have been making new lows, Cincinnati Financial recovered quite nicely today, 3.5% gain. It's got a long way to go, but you can see where it's at right now. And Southwest Airlines got a little bit of a boost. Real quick, I'll point out Bitcoin. I don't really follow Bitcoin, but it's popped up a couple times on our radars today because of the volume, number one. But also, Paul Tudor Jones has been buying Bitcoin. If you're familiar with Paul Tudor Jones, I don't know if you agree or disagree. If you're not familiar with him, you should probably read about the guy or watch. There's a lot of documentaries about him. He's I don't know if you call him legendary hedge fund investor, but I think some would. But anyways, he's been buying Bitcoin. He's got a lot of interesting things to say about it. He likes it because there's a limited, and now he calls it shrinking supply. So maybe something you want to check out. After hours, you got Dropbox reporting earnings. It gained 7% on the day. First ever profitable quarter. They beat on earnings, beat on revenue. I've got a lot to go through, so I'll do it quickly. Roku added about 8% on the day. Earnings were basically flat. Revenue came in better than expected. Streaming hours up 50%. That makes sense. People at home doing their thing. Just in April, streaming hours were up 80%. They still lose 45 cents a share, just as a heads up. Uber added 11% on the day. It's not going to be the same after hours there. Their net losses overall were twice, 100% more than expected. And you go, all right, well, it's a bad quarter. No. We were expecting them to lose $1.4 billion. So everybody that invests in this company says, you know what, I'm going to invest in Uber, and I don't care that they spend all their money and lose an additional $1.4 billion. Here you go. Here's some money I'd like to invest in you. They didn't lose $1.4 billion as expected. They lost $2.9 billion in the last quarter. That's not impressive. Right? The size that they are, and believe it or not, the reason that they lost some of this money was from the ride-sharing companies that they bought or own partial shares of in other countries. So they've proven here that ride-sharing is not profitable. They've now invested in other ride-sharing companies. Those are not making any money. What does it take to make a profit for this company? I don't know. That's a tough one there. You got to ask yourself what you're investing for. What do you believe is going to happen with that company? I'm not saying the shares are going to go down. You see how shares can go up despite losses mounting to record levels. Zillow added 11% on the day. Earnings basically as expected. Revenue beat. Zillow Offers, which is where they buy your house and then they flip it. They're not doing that right now, but they said they were going to pick that back up. They've got 1,791 homes in their inventory, and they would like to buy more. So they think people are going to buy homes more than ever now. They're going to continue that program. I don't know about a date, by the way, but I did see that they wanted to pick that up. We'll maybe do Live Nation. You want to do Live Nation? Live Nation missed on earnings, missed on revenue. The interesting positive out of this is that they said, out of all the shows that they had planned prior to the shutdowns, 80% of them have been rescheduled. And of the 80% of those that have been rescheduled, the majority of fans are electing to keep their tickets and not get the refund back for them or trade it in for something else. So they said because of that, 2021, it's going to be our year. That was their comments, not mine. All right, that's what we've got there. PayPal, interestingly, we talked about this yesterday, their best month, fundamentally, their best month since their IPO. So they're basically saying best month ever. All right, earnings tomorrow. You got Noble, X-Ray, and Hertz, some of the interesting ones you may want to look out for. Dividends paid out from Grainger Worldwide, Hewlett-Packard, ConocoPhillips, Capital One. That's what you have there. I do want to point out, need you to be able to see that. All right, Dexcom, DXCM is ticker symbol. They do the blood monitoring for diabetics. They're going to, there's got a change coming up here next week. So nope, I did it.
Hey, wait, before you.
So they are going to be taking over in the S&P 500. They found their place, and because of that, they are replacing them with Allergan. So that's one swap out. Dexcom is taking the place of Allergan in the S&P 500. And then, welcome, Domino's Pizza. Welcome to the S&P 500. You've got Domino's Pizza taking the place of Capri. Capri no longer fits the criteria there. It's a rough one there. But anyways, that's what you got there. 2 new stocks for the S&P 500. For those of you that like playing the indices or are building your own or whatever you do, I'm not sure. I just like to point those things out for you. I'll take a chance to try to answer some of your questions, and then I feel like I've done a lot of talking. I'm good with it. You don't like Disney? It had a good day. You don't like it at those prices, though? I agree that I think Disney is an interesting look under $100. Yeah, I would have liked to have seen that move lower myself, to be honest with you. Yep. You think it's very interesting showing the sectors bouncing and then the tech standout. Isn't tech due for a pullback? Yeah, I think people could make that argument pretty easily. Yeah, I'm not a Bitcoin guy. You know, I normally don't talk about that, but I do like Paul Tudor Jones. He doesn't influence my decisions in any way, but I do like, you know, learning about people like that, and especially a documentary. He had a great documentary. I just thought it was interesting because he was like tying his shoe or something in the office, and he had to place a trade, but he had to do it with a phone, and it was like a corded phone that he had to call, and he was all worked up about this big trade. I thought that was cool. Reminds you of kind of the old days. Yep. Why are oil tanker stocks tanking? Some of them had really good runs, right? People are going to be asking that question about tech, and we could have asked it about healthcare. Today, healthcare basically had a little bit of a pullback there. You've got, you know, you've got a reason to believe that there should be a pullback in some of those along the way there. And a lot of people are expecting that a drawdown in the amount of oil is coming. So if you got tanks filled up, they only make a profit if they fill that tank, they rent it to somebody out or whatever they're doing. We covered some of that. But if the oil is expected to be drawn down from there, then that's less income for that. It's not a big deal. They don't make money doing that. So it's maybe a false sense of hope there if that's what you're looking for. But that's it. I'm sorry if I'm missing questions here. There's becoming more and more questions, so I'm not picking. I pick one. I just look and I go. And if you're not talking to me, then I'll just skip it over. But do you think we get another stimulus check? It's looking that way, that they're going to do something. I don't really, I guess, want to go crazy, but I just think it's kind of ridiculous that the average person has kind of gotten the shaft in this thing. Not that they deserve anything, but, you know, kind of gotten the shaft. And the money goes to companies that are largely doing okay, or to people that just don't even need the money if you're really talking about people that are hard up and people that are not. So it doesn't matter where you stand on the fence there. I think we can all probably agree that there was a better way to go about this. And I'm not saying I could have done any better, but before you start handing out more trillions of dollars, I certainly hope they at least think about it and put their differences aside. I don't care what side you're on. The last month, the S&P has been flat. Christmas tree, yeah. You think it's a sign the end of the relief rally? Well, I'll tell you, when you get to the halfway mark, so very normal for a stock or a stock market to fall or bounce and then come back to about the halfway level. A lot of people like to look at that. A lot of Fibonacci people get excited about that as well. So that part's normal. What you don't want to see is that it hangs out. So for example, if the stock goes up and then pulls back to about the halfway point, well, you can understand that there's now reason to, some people are bullish and some people are bearish. Okay, it's the halfway point, glass half full, half empty. What you don't like to see is that it hangs out there, because then as time passes, the number of bulls starts to deteriorate, and all of a sudden you get more weakness. Same on the upside. So if you have a big drop, you go up about halfway, people can argue about whether we go higher or lower, but the longer we stay there, well, it's really, in my opinion, not a good sign for the bears. You can't reopen anything now. So many people. Oh, yeah. As far as the economy goes, I mean, you got obviously a disconnect in the states that believe that and how they're doing things. That yesterday's news was, you know, New Jersey locking down for another 30 days, and they put it on TV just to, I guess, incite people's frustrations. But California, people hanging out on the beach, which was probably old video anyways, and then New Jersey, people stuck in their houses for another 30 days. I don't know why you would show that on TV. You know what I mean? Like, what are we trying to do? You get people frustrated there. You're looking for checks in May. Can I volunteer? Like, I don't want it. You know what I mean? I don't want the money. We should be able to do that too. Just don't randomly hand out money to people. Do you think Warren Buffett sold all of his stocks just to wait and see if the airlines filed for bankruptcy? Do you think he'll be back in airlines? Well, airlines have been a tough one for him if you study him. So he's had his go of, trying to get a good deal on some of these airlines. Now, he's smart about it. He doesn't just buy shares and everything. But, yeah, I think, I don't know if he feels like he'll be back into, I can't speak for him, but I know that hasn't been his favorite sector of the market. I don't follow I don't follow biotech much. I don't follow drug companies much. To me, I never grabbed onto it. You notice how I always kind of stay in my lane with this. I won't go into Bitcoin and things. I'll point out if there's an event or something, but biotech and drug stocks they're just not my thing. Right? I don't get excited by them. I don't pretend to understand them. So I'd be a bad person to ask about those stocks. Unless it's like how many times they beat on earnings or what's their normal results. If it's stats driven, yes, but I don't study them enough relative to others. I study their technical moves and of course the volatility, things like that. Does it seem like Warren Buffett's all over the place lately? I don't know. I don't really follow him and his shorter term decisions, so I don't know. Take my slice of the stimulus check. We asked that the other day. We thought, is there a way to just give people money, like as us? Could we just give people money? But we can't give or accept more than $100 without getting in trouble by the SEC. And we don't want to get in trouble with them. Don't want to get in trouble with them. Thoughts on AutoZone? You would think the mid to long-term projection for them would be good, assuming if the economy is slow to restart again or even takes longer, because people aren't buying cars right now. I've been asking around. There is not a lot of cars going on buying. Oh, look at Carvana with their earnings they just had. So you would think that people keeping their cars, they may end up needing to replace the battery when they haven't driven it for 30 days. I know people are going out, but you would expect them to fix their car versus go and buy a new one given what's going on out there. And money's starting to tighten up a little bit too. We're going to talk about that tonight with our clients here as well. Yep. You got it. You didn't take that check, sorry. You want anything from the government? I got the money in 2008 and paper check. I remember that vividly. I was much younger then, but I didn't know any better. I just was like, okay, yeah, tough times out there. That's awesome. They're handing out money. Now that I'm a little older and you know the effects of, you give me this money now and I know what I'm going to have to pay in the future, and I don't want to pay in the future. So don't give me the money now. Give it to the people that need the money. So I'm pretty stuck in my ways on that one, because you just know everybody's going to have to raise taxes, lower benefits and everything. I don't want that. I don't want to pay more taxes. Would you just sell a hoodie? I get questions all the time for people to sell stuff. I don't want to throw stuff in boxes and tape it all up and send it every day. If anybody wants to come and sit here and put stuff in boxes, you're welcome to, but I would rather not. Unless it's like, something interesting that I would have fun playing with. But no, I think we have one other hoodie up front in the front door there. Yeah. What are your thoughts on a percentage of portfolio in cash? You can make the argument, yeah. So you have, obviously, Warren Buffett. Look at all the cash he has. So there's going to be a lot of people that follow his process there. You also have people that may be nearing needing their money and should be more in cash. If you're a younger person, you probably don't have to be in cash. You just go for it. You ask the markets to fall so you can contribute more as you can. But it just really depends on the individual. Yeah. The analysts from JP Morgan saying 3650 on the S&P is fair value. I don't know if they talk there, but they have analysts here and here, and the stock market's here. So I'm not sure they don't send out a memo before they say things. Baird is the same way right now. They don't make the headlines too much. Same thing. They're on both sides. Raymond James on both sides of the fence. I don't know how they allow that. Do a live show while the markets are open. Well, I do have to work. So, it wouldn't be very interesting to just see me staring at a bunch of stuff, I guess, but it's a thought, I guess. Yep. All right. I think I will wrap it up there. I appreciate all you guys hanging out with me today. I did, in fact, cover everything. If you're one of our customers, I'll see you a little bit later. 8 o'clock tonight we'll start. We've got a lot to cover tonight. I've got it in the most clean, simple ways I can show some of the most complicated data that's out there right now in terms of what the big fund managers are looking at, what major mutual funds are looking at. And by the way, major mutual funds out there completely changing the way that they manage funds. Prospectus out the window, new ones being written, so there's a lot of changes. If you think you're investing in something and you were initially comfortable with that, out the window. They're all changing things there. And then also we're going to cover maybe we'll go over all the stocks that are raising their dividends and things as well. I think we'll cover that, but go over the portfolios and everything in between. Enjoy the rest of your day. Thank you so much for stopping by. If I helped you in some way, hit the subscribe button. Thanks.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.